Hi, this is Randy Finney with Right Side of the Chart, and this is a midday update for Monday, June 3rd, 2019. I wanted to get a video out where I can just kind of share my thoughts. There's a lot going on in the markets now, and I wanted to convey my thoughts as clearly as possible here. Start out with today. What's going on today? The cues look like we had a nice pre-market rally going, and then just a sudden reversal. Now it fits into that pattern of any little bounce getting sold into. But I'll tell you this: it seems a little odd today. If you're following the headlines, it's I can describe it as nothing less than an all-out blitzkrieg. If you're familiar with that term, it means lightning war. Germany used it in World War II. It means that come in and hit your enemies hard and fast. It seems like Washington has done that to the markets. They have come out. The DOJ has come out going after Google, with the FTC going after Facebook and Amazon on monopolistic practices and antitrust practices. All today knocking these stocks down. Here, let me show you this. And keep in mind, these are the largest companies in the world. They are by far the largest heavy-weighted, top-weighted components of both QQQ and SPY. You have Alphabet down 7%. You have Facebook down almost 9%, and you have Amazon down 5% on that news. In fact, earlier today, the SPY was up. But, as I always said, I always say this: live by fangs, die by the fangs. They lifted this market up to where it is, off all the way where it came from on the 2009 lows. They were the leading stocks. And again, they had the highest weighting of the index. It's not to say that other stocks didn't rise as well, but they elevated and really took this market, a good part of it, to where it is. And I so when that trade reverses, it goes the other way, and it's not going to be pretty because these are over-owned, overloved stocks. And this is what happens when you yell fire and someone yells fire and you get a crowded rush for the exits, meaning everybody tries to sell at the same time because everybody, generically speaking, of course, had mutual funds, pension plans, individuals, they own these stocks. And so anyways, for whatever reason, again, Washington has decided to, come after these, three of the big five FANG stocks today. After the market's already going down quite a bit, can't figure out why they wouldn't do it when everything was strong. But whatever, let's just move on from that. Whatever the reasons are, they are, and that's what's going on here. And I wanted to talk a little bit about the charts here. First, let me say this: that my long-term outlook for the market, which I'm sure you probably know by now if you're a member of the site and you followed me for a while on YouTube channel, maybe just came in. That hasn't changed, and that is that the fact that most likely this was the initial leg down in a new bear market. The S&P 500 only made it equal high. Some indexes didn't, so we basically double topped, a slight new high in QQQ, but that's not unusual in a security. After a major top's put in, pop a marginal new high. But again, it's all reflected in the charts. So this case, I wanted to say this bearish case now is even stronger than it was back here. And if you recall in recent videos, and I'll try to pull some of those for months as we're heading up here, and the vast majority of market experts, pundits, were all economists. Everybody was bullish, looking for the market to make new highs and beyond in 2019, the economy to continue to roar. This was the scenario that I had coming out here: a divergent high, pop the divergent high, put in negative divergence, extend the existing divergences. That is powerful stuff for the longer term. This is a weekly chart. These aren't 60-minute charts like I've been highlighting recently, looking for a potential bounce. These are long-term charts that take months, if not years, to play out when you finally get these confirmed divergences. So as I always say, you have potential and then confirmed. These divergences were confirmed right here when the indicators on QQQ and SPY put in lower highs with prices making higher highs, and then you had that lower second high was confirmed with the bearish crossover. At least that's me. That's the way I. You won't find that in textbooks, but I consider that confirmed divergences. Most textbooks will just say you have negative divergence when a security is making a higher high and the indicators are making lower highs. But I like to see that crossover. It's just an additional kicker, sell signal for some, and a pretty bearish, signal in itself. But it also then you effectively have a lower peak. That's the thing, because as long as security's rising, you might have potential divergence. But when these are trend indicators, if they're pointing up, they can keep going. A lot like we'll get to here in a second. On the 60-minute charts that I've been covering, we've had the bullish divergences. They continue to expand, but we keep going lower. And if we keep going much lower, we will burn through or negate those divergences. But at this point, this is the long-term stuff. So I'll make, I won't mix words here. Longer term, intermediate term, I'm talking weeks to months from now. Quite likely a year more. This to me is bearish. We'll see. We'll take it one step at a time. These are potential targets for QQQ down here. A lot of people are looking again for that. Maybe not a lot of people now. They are not a lot of people back here, but people probably looking for a test of that low back there from December. And I think we'll continue on down. Maybe get a little reaction on around there. In fact, I'd be surprised if we didn't, but maybe a minor reaction. But I also wouldn't be surprised at all if we just slice right through it. So let's go first things first. Let's take a look at what's happened now. We're trading below that 40-week moving average I highlighted last week. Same as a 200-day, but it's a weekly candle. So we just started this. Last week we closed right about on it. Today's only Monday, so there's still a chance for a snapback rally here. And let's look at the charts and get into that. But before I do, did I already cover? Yeah, I think I covered the big FANG stocks. Let me just show you those again. How they look on the weekly. To find the right board here. Hold on. Yeah, I have different boards for these stocks, but drawing boards. But there's Facebook down below trend, breakdown, backtest, rolling over. Here's a secondary trend line, a more important trend line that comes in. PPO just made a bearish cross, and I'm just going over the ones that are getting knocked down today now, not all inclusive. There's Amazon. The first drop was about 31%. So more to come, meaning we went up backtested. Now we're rolling over a backtest of the primary uptrend line here. That's a pretty bearish chart, and it put in a divergent high back there. So here's an example of a stock that topped back in 2018 and has still not seen and probably won't see that high again, quite possibly for years. And then you have what was the other one that I didn't cover yet? Amazon Alphabet, GOGL. And that's just a beautiful trend line. Look at that nice trend line off the lows here in 2011. So many reactions, breakdown, back test with a second divergent high, about an equal high, double top failure, and impulsive selling so far. So as you also may recall from the videos back, in earlier this year when the market was ripping higher, and there was just, I imagine a lot of people just couldn't fathom, this market coming down this much, or even going down lower, like I said, all the way down to my targets. I know that was probably just dismissed, but what I said would happen, I said, mark my words, that you'll start to get the correction as the charts, the bearish charts, technicals play out. The news will follow, the headlines will follow. So what's happened, if you've scanned the headlines the last week or so, all I'm seeing is, just increasing talk about economic indicators rolling over, softening, recession odds going up, the probability for a Fed rate hike going up, and everything else there. Of course, this the latest here with the DOJ and FTC as well. And again, the news will follow the charts. That's one thing that I've learned many years ago. If you trade off headlines, you're going to be behind the curve. If you're shorting today, there might be, and there's going to be, I believe, more downside to come in the coming weeks to months. But like every correction, and I pointed out recently, these were 10% snapback rallies, and there were several of those 10% plus in that last correction or drop down here with 20-something% drop. So if you short at the wrong time, you'll either have to ride out a very powerful counter trend rally, or you're going to get stopped out if you're using proper money management. 10% stop, that's a pretty hefty stop on an index. So it's up to you again if you're swinging for the fences, playing the long game. But the practical thing to do, I think the objective thing is on core shorts, swing shorts, is wait for bounce backs into resistance. If you didn't short yet, or you covered shorts back here like I did, and you're waiting for a bounce back, a rally, we'll get that. We'll get that bounce back. And look, if it doesn't come until we've dropped this far and then we get it, so be it. Again, it's all about risk reward, looking for objective entries, and right now it's not a very objective time to add new short exposure. We have some support coming up here. Let me give you a line there. You can see some support levels here. I can move lines all around here. We have a reaction low right there. But that's the thing. That's the other thing I wanted to talk about. I told you I'd kind of be all over the place in this video. Yeah, I said when we started, before we even started to correct and roll over from the top, I said I'd like to watch the correction and see how this correction develops to gauge the nature of it. Because, as I said, if you just go through support level after support levels, key support levels that you would expect the buyers to step in. For example, right back here, 178, key support level, and they did. They stepped in, they bought it. The dip buyers bought it at 178, and there was a little rally. But guess what? The market, that rally lasted all of 3 days, and then it got sold into. We danced on it again and gave it up. We broke support. We hit a couple other supports on the way down. One after another, they're being shattered. And that tells me it speaks to the character of this market. And it tells me that there are a lot more trapped sellers that want out than there are people on the sidelines that want in, that want to buy the dips. They are stepping in to buy the dips, but as any correction usually goes, then the most aggressive dip buying comes on the first dip down. After that lot gets burned, they're a little less eager to jump in and buy the dips. They may try it again, and eventually they give up, and at some point you reach equilibrium, and prices get down enough where the new set of buyers will come in and say, look, I didn't buy that dip, or I did and I got out, I stopped out. But at this point, if you liked QQQ at 178, you got to love it at 170. And so then at that point you reach again an equilibrium between buyers and sellers. Prices stop, and then all of a sudden you get a counter trend bounce. So let's zero in on the intraday charts, and we'll try to gauge if and when that comes. But right now, I'll tell you, as I'm doing this video, everything I've seen today is pretty darn bearish. You can chalk it up to the headlines if you want, but again, it speaks to the underlying supply demand dynamics, because as you guys know, if you've traded long enough or invested long enough, when the market's in bull mode, in a strong bull market or a strong bullish trend, good news is good news and bad news is good news, or at least shrugged off. Likewise, during a powerful downtrend, a clear downtrend, the opposite happens. Where bad news is bad news, like today, those FTC and DOJ investigations. But then again, good news is just shrugged off. And more importantly, like I said, when you come down and start smashing through some pretty good support levels, when you're oversold, where buyers should be stepping in, divergence is everything, and they're not. It's just not a good sign. All right, so let's start out with, I'm going to go over these charts here, these index charts, and this kind of will help clarify what I'm thinking here. So we had this morning, before the market opened, I posted a chart of the futures, and I said that the bullish divergences are still intact on the index futures, including this ES 60-minute chart. ES is the S&P 500 E-mini. Arrow breaks indicate the key resistance levels, which could trigger more buying if taken out. So again, and I went on to say in that post, there are no buy signals, and the trend is still bearish. So here's the arrow breaks. You have an arrow break right here. You can see there's a gap right there from the weekend where the futures closed over the weekend. That was arrow break 1, arrow break 2, arrow break 3, plus it comes in at price resistance in the downtrend line. And now, look, these levels may still come into play. By the time I do this video, the markets could be rocketing on some tweet or whatever reason. Maybe they're just sold out and the buyers step in. But what happened is, that was again this morning. And so what was that, 27.49.59? Let's pull up a chart now and see what happens since then. 27.49.59, and then the next level was there at, did I have an arrow break there? I think I did. I should have had it. That was my next resistance level. Let me go back to that. Yes, I did. 27.65 there. Sorry about that. And what happened? We hit it to the button. That's resistance. This tells me, and this is one thing about technical analysis. I'll tell you guys, it works great at times, good at other times, okay at sometimes. And again, maybe it's just my technical analysis, the way I see things. Everybody's different. But I can tell you this: in a downtrend, especially impulsive selling, it shines. It works amazing. Why? Because at that point, fundamentals are thrown out the door. Fundamentals are what Warren Buffett uses if he's going to buy an investment for the next decade, and he'll look at the earnings balance sheets. During times of panic selling, traders flock to technical analysis, and I'll tell you time and time again, these levels were here in advance, and you can see you hit these levels, and so this is the trend. Every little bounce is getting sold into at the shallowest or the earliest, some of the earliest resistance levels. So we had a very muted bounce. And we couldn't take that level out. Had we taken it out, that would open the door for a move up to the next level. But no, they came in pretty aggressively so far and shot the market down right there. So now again, these divergences are still intact. And I'm going to say this real quick as well. There's an expression in the stock market. It's always darkest just before the dawn. And so things are going to look like death right before the bottom. And I'm not looking for the end of the permanent end of this rally, maybe a temporary end before a bounce. And it could be a day like this where you can't imagine things getting worse with the DOJ and FTC probes. Those big FANG stocks down so much. The headlines, like I said, just got awfully bearish. And that's usually when you get that near term, at least a near term, sometimes a final capitulation. I mean, that's still a possibility, guys. We could still, and the same thing that I said before about the headlines changing, they'll follow the charts. If we start to rally and we come in and we take out that level, that 2765, and then we come up higher and we take out, then we have take out 2800 in the downtrend line and we continue to rally, you're going to hear all the reasons why you should have been buying back here, but you'll hear them here. This is when the news will become bullish. This is when you'll hear bullish developments on the trade wars and other things like that. And again, that's big if. Now, we may go down here before we come up back here again, or we may never see these levels, at least not in 2019 again. Keep that in mind. I'm just giving you these levels, the things to watch for. As of now, these divergences are intact. But as I showed you a minute ago, talking about divergences being burned through, these are momentum indicators. Currently, the momentum's up, but the trend is lower. I'm sorry, the momentum is to the downside. The trend is bearish. And so if we keep stair-stepping lower, we'll take out these divergences. We'll take out the previous lows, and we'll no longer have negative divergence. And to me, tell you, throughout the bull market, you get 60-minute divergences like this on the indexes. Those are good for multi-week swing trades, usually 10% or more rallies, especially during a bull trend. And a bear trend, is only looking, still am, if we pop those levels, if we could start moving up. And now let's say 4 to 7% rally at best. We'll see. Maybe it'll be more than that. But those are the things I'm watching. And right now, we don't have any buy signals. In fact, the fact that they shot it down so aggressively, stepped in so hard at that level, it's pretty bearish. Now we look at QQQ or the NQs. I use the futures because that's what's trading in pre-market. It'll give us a better idea what happened overnight. So again, this was from pre-market this morning, NASDAQ 100 futures. And so here's my arrow breaks. I'm stating the same thing. We needed to take that level out. That clears the door. That's a breakout, and then you can go long right there if you break out for a move up here to 72.16 and these downtrend lines, which roughly intersect. And then if that 72.16 and the downtrend lines were taken out, that should have popped us up there and possibly all the way up here to about 73.72. That could still happen. These divergences are still in, well, that was this morning. Hold on, let me get to the updated chart here. Look what happened. See, this is what I've been doing. I've been moving these divergence lines down since here. They're just being burned through. They're not negated, not taken out yet. We haven't dropped down, so there's still room for more downside for these to play out. And I will tell you right now, I think before they are burned through, we'll get a decent tradable counter-trend rally. Maybe it only goes up to this downtrend line, maybe up to that 72.16 level. But I think it'll come. But there are no guarantees because, as I said, we keep going down much more. Maybe the rubber band, instead of snapping back, maybe it breaks and we get that kind of waterfall sell-off like we had towards the end of the fourth quarter last year. So I just want to say, as of now, there's no buy signals. There's still these divergences, a potential for a rally, and you got to watch those levels and wait for support, resistance to be taken out. As you see these little resistance levels get taken out, one after, and then the next one, it tells you then, at least at that point in time, the buyers are now in control. That you've had all the weak-handed longs, the trap longs that wanted out, that regretted buying here up to the top, and when it started going down, they thought, okay, normal pullback. And at some point here, especially probably when these recent lows, this is where they probably really got nervous. When that previous low was taken out, that's where you probably have a lot of people that want out, and those are the ones selling into these rips. So if you can start to take out the resistance levels, it means that they've been, those that want out of the market, at least in the near term, have gotten out, and then we can have a decent rally there. Okay, so that's NQ. Let's look at the 60-minute charts. I mean the daily charts. If there's not enough time in this video, I'll move out and I'll do the treasuries, gold, all those things in a separate video. But keep in mind too that I think the fate of the TLT or TB trade, gold, I've been harping on that more than any unofficial trade. I've been harping on that as a good place to put some of your money to diversify. It's asset allocation. It's also a flight to safety asset. And I'm still waiting for a little more upside in the euro. I'll get to that in a second. If I don't get to that in this video, I will cover it in a separate video or some charts that I'll send out and post on the front page for members. But right now we have QQQ at support. Roughly at support. It's a little below this level, 171.15. Remember, when you have big price swings like today, it is, especially when you have a lot of downward momentum or velocity. I call this a momentum fueled overshoot. Doesn't mean that we're going to do it, but it is more than common. If that's the level that's going to hold, it's actually two levels in close proximity. The lower line is at 171.15. If that's the level it's going to hold, it is not unusual to have that downward momentum that we have going in there, overshoot it intraday, and then we close on or above that level. So there's support. If that goes, we do have a little reaction right here on that candle and a couple other reactions. So I'll give you one other line. Next support, I would call it minor support. Come in at about 169.50, and then ultimately down here about 166.47. These are still my, and anything up and down to that level is still within the realm of a healthy correction. As painful as this sell-off might be to someone who was long from all the way down, it's not. It's only retraced, I think, a little over 38%, 38.2% fib. If you put up Fibonacci retracements here, I don't have a clean board, but let me use this one. So there's the lows from December. Put up the fibs on QQQ. Yeah, so we overshot the 38.2. We haven't even retraced half. There's the 50% retracement, which would mean we've given back half the rally off the lows there. And a typical correction or counter trend move will typically fall between the 38.2 to the 61.8 fib or any of those in between. So I just want to say that now. Again, I think it's more than that. I think these levels will go, but I just wanted to point that out, that's where we're at right now. And this is where we start breaking these levels. That's where we can really get that waterfall type sell-off like you saw in 2008. The really strong impulsive selling. Something will make this look like a walk in the park. This move down here. SPY, let's give you that. SPY, I don't have a lot. Let me run through my different boards here. There's one line. There's a little minor support there, 273-ish. There's a reaction low. Call it, again, 273-ish. And it's not, there is support. It's worth mentioning, or I wouldn't have the line there. That's where we're at on SPY. But it's not great support. And I still favor, before all said and done, even if the market's going to new highs. That's what they mean. I mean by minimum target, my swing target down. So we could maybe have a kickback rally or not and get there. But if we go much below there, that's where I think, again, we get waterfall type selling. So you can see where the levels are. Let me go to the 60-minute charts here on SPY. There's the bullish divergence right here. You can see it's still intact. But well, we had it right here. That was the first time we had bullish divergence. Then here, and so these divergences are not playing out for a rally yet, but nor are they negated. So that's why you have to be on alert. And don't be surprised if we do get a very sharp counter trend rally if the buyers step in soon. We could probably draw a little minor downtrend line here. Again, I'm on a 60-minute chart of SPY, and here this would probably trigger your be a near-term buy sell signal right here, as well as those levels that I covered earlier today on the ES. So there's a SPY 60-minute. I think these are the targets. Did I give you these targets the other day? Yeah, I did. These are all potential bounce targets. If you're wondering which one I'm leaning to, I can't even tell you until we reverse. We haven't even reversed yet. So to try to pick a preferred target is tough. QQQ 60-minute chart, you can see the divergence is still there. It's not by much. If we go a lot lower, you're going to have the PPO and the RSIs go down and take out those previous lows. But for now, they're intact. And therefore, the potential for rally is still very much alive. Here's a downtrend line to watch. A break of that downtrend line would, probably kick us up back here to probably at least that level there, 179. Maybe we'll see. If not, keep in mind the weekly charts, as I showed you, and the daily charts are really bearish. So sometimes I've seen this, especially in bear market. This would be bear market behavior. To get a breakout, everything starts rallying. It looks good. A couple bullish headlines come out. And hold on one second. I think the battery on my wireless mouse just died, so I can't pause the video. I got to plug that in. There we go. Okay. So bear market action would be, let's say, a breakout, and everybody starts say that looks good. Markets rallied up there, and then all of a sudden they do the same thing they've been doing recently, is just sell into it impulsively. And if that happens, that tells you you're probably in probably maybe the midpoint of a much larger move down before you get any decent tradable counter trend rally. And finally, here's IWM. I don't cover it in every video, but it's worth mentioning now. It's up pretty good. It's up 0.66% today. So it tells me, and SPY is only down as I do the videos. I'm talking now, and it's 2:05 p.m. Eastern. SPY is flat. It's 0.05 or 0.05, so that's flat on SPY. IWM's got a decent rally going, and there's your levels you need to see it break out. 148.50 and the downtrend line, they intersect, so that would be a buy signal there if they can pop that impulsively. And again, this is all about today, those big FANG stocks, and that's why the SPY would be solidly positive if it wasn't for that. QQQ is down so much because they comprise a much larger weighting of QQQ. And but again, maybe money will come back in. Headlines, or the sentiment, I should say, ebbs and flows. If those big three FANGs start to rally, people are going to come in and say, oh, they were good buys. Yes, they're being investigated. But worst case scenario, it would mean blah, blah, blah. And so from a fundamental perspective, and again, I'm just telling you what you'll probably hear on TV when they start to rally. People make the case why they're good buys at those levels if they rally. So that's it. And guys, I know I'm all over the place, but let me just wrap this video up. I'm going to do the other stuff in a separate video. This one's gone too long. Let me be clear again and not mix words. Intermediate to longer term, the charts still appear clearly bearish to me. There are no guarantees in trading. I'm trying to find the right board here. Okay, yeah, that one. I want to take that fib off. So I do believe in the coming weeks to months, there is more downside to come, considerable more downside. That could change, and if it does change, I'll let you know my thoughts. Near term, there's still a possibility for rally, although we don't have any buy signals yet, although I gave you some levels to look if and as each of those levels are popped, and you get impulsive buying and they can pop above those levels and hold them, that increases the chance to go up to the next ones. But I wouldn't be looking for, right now, not anything much more than let's assume we get a rally from this level or soon. I'd say 4 to 7% counter trend bounce right now. That's just a range at this point in time. All right, we're going to wrap it up here. This has been Randy Finney with the Right Side of the Chart. Hope you enjoyed it.